Well, there you have it. The market is officially open, and what better way to kick this off than JD Durkin joining me now. He is the host for Public.com.
There's no better way to kick it off than with me. No, thank you for having me.
I always love having you on the show. I mean, but you didn't let me finish your title. So he is also a CBS News contributor, and he's joining me now. I mean, let's get a glimpse at the market. What's it doing?
A little flat to the downside today. Not a big, maybe not a big surprise there. But what's amazing to me, Trinity, is today marks 5 weeks since the stock market reached an all-time high. And you just think about this recession fear-fueled sell-off we had a couple Mondays ago, and the all-time high back on Tuesday, July 16th for the S&P 500.
Well, I was going to say, the 8th.
69,
yes.
And here we are really just 60 points or so off of that. So for all the fear, all the hair on fire that we had a couple weeks ago, we saw investors take profits back in that historic one-day sell-off, more or less, the Japanese carry trade, et cetera. But we've really seen a nice resurgence and a nice rotation back to a lot of those big names who have been performing now with a really impressive streak, the longest running streak so far of the year for the S&P and the NASDAQ.
And what would you think was the major driving factor behind this eighth day winning streak? Try saying that 10 times fast.
Not easily. I'm glad you had to say it, so I didn't have to be the one to say it with a microphone. I think last week we kind of took a data point by data point, right? We got really good news out of Walmart in terms of a beat on top and bottom line, extending their revenue forecast for the year in a really positive way. Also, initial jobless claims. We get this data point every Thursday, Trinity, and as you know, we kind of talk about it, we give it some attention, but after that sell-off, I think there was such desperation, such interest to try and have any positive data point, and that was reinforced there by a better than expected retail sales figure. So you took one data point that was good, followed to another, and suddenly that whole narrative shifted really over the course of just the last few days. And I think that speaks to this incredible resilience that we've seen in that bounce back off of that August 5th sell-off.
And I just want to point out that we're getting images right now of the executive team making their way down to the Bell podium, to the trading floor, and they're signing our secret wall over there by the staircase. You remember that wall,
Secret
JD?
wall is awesome.
We have a few secrets
I love
around this
showing
exchange.
guests the wall. I think they think it's like the absolute coolest thing. Well, there's a lot of cool things.
I still think it's the coolest thing. I need to sign the wall one day.
I need to, but the thing is, when you walk down the wall, you don't always know where the celebrities have signed. Like I'm looking for like The Rock or Rob Gronkowski or people like that. I got to figure out exactly where they are. But it's an awesome feature we have.
So many people sign this wall that we actually have to replace those different, parts of the wall in different areas of the institution. But anyways, back on track to the market. Let's talk about retail numbers, right? So there's a lot of heavy hitters coming out with their numbers. What do you think investors should be preparing for?
We want to see the strength of the consumer. And I think tomorrow we got a handful of great New York Stock Exchange companies in the retail space set to report. We got Macy's, we got Target. We've also got TJX. I don't know about you. I'm a bit of a Maxinista. I admit I love the treasure hunt. I love the off-price.
I can't do that. I don't like the treasure hunt.
You don't like the treasure hunt?
No way.
Listen, the treasure hunt is not for everyone. You need to have a real brave stomach to walk in there. You don't know where you're going to get. But I think that kind of speaks to maybe a bit of a shift in the consumer. So, a company like TJX, which of course is TJ Maxx and Marshalls as well, the stock is actually slightly outperforming the broader S&P 500. It's about 20% up or so since the start of the year today. So we want to get a sense on the underlying consumer. Are more consumers going to a place like a TJ Maxx or a Marshalls to do some of that off-brand shopping? That'll kind of speak to, I think, the sentiment and the confidence Americans have as we, of course, enter, believe it or not, the holiday shopping quarter is going to be here before we know it, front and center for a lot of these big names tomorrow.
Oh, trust me, that's at the forefront of my mind. I love a good shopping day, shopping week. I mean, I'll take it all. But I want to go back to those numbers. So we learned last week actually that there was a 1% jump in the retail sector in July. So what do you think is driving this, and what is the overall sentiment when it comes to consumers?
Yeah, I think, like we said earlier, I think you just kind of take it like one data point at a time. And for whatever reason, Americans may feel as if, hey, although I may feel a little bit sour overall about the macro set of economic conditions, maybe I have a little bit of extra discretionary income. I think that's why the central bank is so focused right now on labor data as opposed to the price stability part of its dual mandate. And I think we'll hear that more from Fed Chair Jay Powell when he speaks at Jackson Hole in Wyoming on Friday, right? Really indicate to investors that if we need to, if the central bank really is in a position where it needs to, we will adjust interest rates in light of if there is an unexpected deterioration of labor market conditions. And I think we've seen that in some of the retail spending as well.
And you beat me to it because that was going to be my next point. I wanted to talk to you. Well, two questions here. Why is this such a big event? Why should investors be paying attention to this other than the fact of the interest rates? And, what are you anticipating? I know that, we're anticipating anticipating him to drop the interest rates very soon, but I mean, he's sort of even-keeled whenever he gives these public remarks.
Yeah, he absolutely is. He plays the game. For all the criticism of the central bank, I think you got to say Jay Powell, for the most part, has been incredibly consistent with his rhetoric the last few years. Every opportunity he has to make public comments, he says a variation of the same thing. The historical record strongly argues against prematurely loosening monetary policy, and we will stay the course until the job is done. Trinity, because he's been saying that for the last 2 years, I expect him to say that line at some point on Friday, and then otherwise they call it basically Davos for banking, right? So you're tackling some of the biggest geopolitical and financial and banking stories while they all go off and like ride horsebacks and wear cowboy hats. So that's basically why Jackson Hole is cool, but it does give us this really unique opportunity to hear from the chairman of the central bank in between these FOMC meetings, and I think we know everyone will be closely paying attention. This is really the last time we'll hear from him before that September 18th FOMC meeting, and that is, as you said, the big one we're finally expecting an interest rate cut for. The question is it 50 basis points or something, I think, more realistic, like a quarter basis point cut?
And speaking of September, obviously an election coming up. So talk to me about, with this election coming up, when are we going to see the politicians sort of, make a decision on the narrative that they're trying to push to make their agenda look more favorable?
Yeah, the election's certainly here. I'm one of the many people who stayed up way too late last night to watch President Biden. He was on stage at 11:30. I don't know how I managed to wake up this morning, but obviously the DNC is full underway. And you'll listen to the kind of competing narratives about the economy between Vice President Harris and former President Donald Trump. You always got to keep in mind, you campaign in poetry, you govern in prose. A lot of the big economic policies that get promised on the campaign trail, they're not realistic, because the truth of the matter is, no matter who wins, you probably need 60 votes in the U.S. Senate to pass the real big sweeping legislation. Neither party is likely going to have that, depending on the November outcome. So you hear a lot of things that get talked about that might kind of rile up the base. Ironically, I think a lot of economists are kind of sour on economic policies that tend to poll very well with Americans, especially in swing states. So I know there's a lot of grumbling and eye rolling from economists over things we've heard from both campaigns, but it's a different situation when it actually comes time to governing and you're looking over at the Senate and the House and you're saying, I got a tiny margin, we got to compromise. Compromise should not be a dirty word, and I think that's important for investors to keep in mind.
JD, always a pleasure.
Thanks, Trinity.
I'll catch up with you later.